Hi, I'm Derek Dahl, owner of Wholesale Properties TV. I'm here with Beth Jo Zeitzer.
Beth Jo Zeitzer, yes.
Yeah, with your company R.O.I. Properties.
Yes.
It's very nice to meet you.
Nice for you to be here.
Thanks for meeting with us today.
Yes.
What is the residential and commercial real estate investment market like today?
Well, we're seeing a tremendous amount of activity from a lot of different types of buyers. We're seeing, the international influence coming in, Canadian buyers, but then we're seeing a lot of international buyers from all over the place coming to buy properties here, both residential as well as commercial. Strong investor interest on properties $150,000 and below. So very, very high buyer base there, all cash deals, closing very, very quickly, generally no due diligence, hard money up front on a lot of those transactions.
So all on the lower end of the market, 150.
All on the lower end of the market. And then we're seeing some interesting things kind of contrast on the commercial side in that we're seeing a lot of buyers. Now we're starting to see some local buyers in on the commercial side, but for a long while it was Canadian, Californian, and then other international buyers, and that's kind of now moved to a little bit further Midwest, East, and then back to the Phoenix area. Seeing strong interest on the multifamily side. So any multifamily asset that we get in, those are usually 10 to 15 buyers that are bidding on those properties.
Wow.
In some cases, the very, the really nice institutional assets, you can bring those to market. Those are 5.5 cap now, and those deals are going in very, very high volume. And lots and lots of buyers coming in on those deals. So you might get 40, 50 buyers in on a really nice Class A asset.
Sure.
So lots and lots of activity there.
That's great.
Yeah.
So as far as the investor activity, and what you do, it's not necessarily just the distressed market. You're dealing in all different types of, apartments, shopping centers, housing. It doesn't have to be foreclosures, is that right?
Well, we are seeing most of the properties that we deal with do have some level of distress, but it spans all property types.
Okay.
So we think of a lot of the REO or foreclosure activity as being heavy just on housing, but it's actually now heavy across the board, starting with housing and then moving into multifamily,
Right.
so apartments, and then from there kind of moving into different market segments. So a lot of the single tenant office industrial product now to through multi-tenant, we see a lot of hotels as well as mini storage assets also. So kind of a funky range of product, but in most cases, we're dealing with some level of distress in this marketplace. And those are the deals that are trading. Not a lot of the retail deals, as opposed to wholesale or distressed deals.
Great. So what are some of the challenges and opportunities in this market?
Well, I think the challenges are we are in some market segments, so some product segments, we are in a continuing kind of free fall. So it's hard to recognize where that bottom really is in the marketplace. And when you've reached it, and then when you've passed it, and we've seen what looks like a bottom on the some of the single family in that, especially that very, very low entry level.
Well, we thought we were at a bottom last year, and then all of a sudden it started declining again, right? So
just recently, the decline that we have seen again is really probably 60 days in, and a lot of that just has to do with the fact that we don't have the first-time home buyer credit. So those who are buying to flip to owner occupants, those opportunities are fewer and far between.
Right.
So most of the investors are looking more to longer-term strategies. But we're seeing, again, this kind of it's hard to identify where that bottom really is in the market. We've likely seen some stabilization and likely a market bottom in some of the very low end, the very entry-level product. Move up on the single-family side, no.
Right.
Luxury, absolutely not. And so that's when you hear statistics like that, and then you have this potential moratorium, that's being imposed on a nationwide basis. Even though it doesn't impact our state as much because we are a non-judicial foreclosure state, we're still starting to see, people kind of hold off and really are not, not acting as much as they were. So
that's very recent in the news. Just
very,
in the
very
last
recent.
week. Yeah.
Last 10 days or so. And I personally do not think that we will actually take that all the way through the moratoria, but mostly because we're a non-judicial foreclosure state.
Right.
So we'll have some isolated occurrences there.
Right. As far as financing, what are some trends in financing? What's available to investors right now?
Not that much available to investors. Really, the financing that's out there is owner-occupant based. We are seeing some financing available through hard money lenders for investors. So basically, you're coming in with 50% down,
Right.
50% loan to value. So those deals are out there. The major institutions are really not doing a lot of investor financing, other than I am starting to see some programs on the multifamily side with some of the more larger institutions.
Oh, okay.
Because pricing has come down so low on the multifamily side that they're now saying, well, it looks like we have seen a bottom there. Hopefully we have.
But
So
for the other products like shopping centers, office buildings, there's
very, very little. Very,
Right.
very little financing. However, if you are an owner-occupant, okay, if you are buying for your own purpose, okay, you're buying to, occupy an office building or occupy a retail store, there's lots and lots of SBA financing out there right now. The rates are great. They're actually many banks are doing some very nice long-term loans, fully amortizing over a 30-year period, and I mean, they're really good loans that are very, very attractive to an owner-occupant. So if you're an owner-occupant, whether it's on the single-family side or on a commercial property, lots of financing opportunities available. On the investment side is where it gets a little trickier. And more hard money loans on the investment side, and then we are starting to see some institutions play on the multifamily side.
Right. Right, interesting, thank you.
Yeah, absolutely.
So what is the best way to get in front of these lenders and trustees to get the REO properties?
Well, I think the key is really, partnering with a very knowledgeable broker or consultant that can really help you get in front of the right people in a meaningful way. And so being able to position yourself as a credible investor, being able to show that you have proof of funds, that you have the capability to actually not only just bid on the properties, but actually acquire, execute within short order. So showing proof of funds is really very, very important. And then identification of the product, knowing there's a lot out there, so there's a lot to sort through. How do you meaningfully get in front of the right product, identify that product, and then the people who actually control the disposition side of that.
So for proof of funds, explain exactly what the proof of funds that they're looking for. What is that?
Sure. Generally, they'll look for a bank account statement that shows that you have whatever down payment that you're putting down. And on these investment properties, it's like 100%. So you'd want to be able to show that you have the ability to acquire those properties, all cash. Or if you are financing, to be whatever that down payment portion would be, that you have ready access, and so you're basically, you can kind of pull off a statement off of your internet banking account, PDF it, utilize that, and then any offer that you're submitting with proof of funds.
And are you seeing that they're requiring that money to be in there for a particular amount of time, or can you just borrow from somebody, get it into that account, and show proof of that?
Our lenders will smoke you out. They're not going to look for kind of a temporary, fix there. They'll ask for proof of funds, and then they'll want to see, along the way as you're hitting all the milestones and due diligence, and actually getting ready to close the transaction, that there are funds in that account.
Okay.
So, and in general, this is not an arena where you can kind of dabble. You got to be really committed and be ready to go. And otherwise you get kind of run over.
Yeah.
And if a lender has a bad experience working with you, they'll never do business with you again. You'll never have an accepted offer, with them. And generally, a lot of these asset managers move around a little bit, and they have long memories.
Yeah, so you want to be prepared going in.
You want to be prepared, yes, and position yourself as a credible buyer.
And you help your clients do that, is that right?
Absolutely. And so, really developing a strategy for an investor, knowing what you're looking for. There's, again, a lot of noise out there, a lot of different types of properties. and knowing what you can manage. You know, a lot of investors, if you're kind of a newbie investor, you're going to be self-managed. So you
Right.
want to make sure that it's a property that you're going to feel comfortable on the management side with, or again, you're partnering with a resource that can provide you with the management infrastructure that you need. And then, of course, so identifying the product, ensuring that you can actually perform, and that on the back end, that you can actually manage those properties and you have infrastructure set up. And then being able to, as a broker or consultant, being able to actually position the buyer so that they are credible. You know, being able to show what they've done. What does their resume look like? How many properties do they own? Or if they don't, why should you sell this property to this investor over another cash buyer?
Right.
So very,
Good.
very important.
Yeah, very important and great information. Thank you very much, Beth
My pleasure.
Jo. Very appreciative of this interview, and thank you for watching.